There's not a whole lot of data for the US markets to sink their teeth into this week. The existing home sales figures are joined by the usual jobs claims, which just fell to their lowest level since the pandemic struck the States on Thursday, before the flash manufacturing and services PMIs arrive on Friday. It's unclear whether the lack of action will impede the Dow Jones's ability to hit new heights, or whether the relative quiet will allow it a serious expedition above 34,000. Already, the index has crossed that level in the aftermath of last Friday's stupendous GDP and retail sales growth out of China. Now it could find itself on the path towards 35,000 if all goes its way in the next week and a half. Much of the direction of the US markets is going to be dictated by the state of the ongoing earnings season. Coca-Cola reports on Monday, followed by Procter & Gamble, and, after their disappointing vaccine update, Johnson & Johnson on Tuesday. Verizon is in on Wednesday, while Intel, AT&T, and Pfizer report on Thursday. The undoubted highlight of the earnings calendar, however, is Netflix's first quarter results on Tuesday. Netflix's fourth quarter update in January reflected the fact that the streaming service is now the default entertainment provider for many households around the globe. Revenue rose 21.5% to $6.64 billion, compared to estimates of $6.626 billion, while the company added 8.5 million net paid subscribers, more than 2 million above what was expected by analysts. That increase saw the firm finish 2020 with more than 200 million subscribers for the first time in its history, after hitting the 100 million mark back in 2017. Yet it didn't knock every metric out of the park. At $1.19 per share, earnings fell significantly short of the $1.39 penciled in by analysts. With room for improvement then, expectations are still very high for Q1. Luckily, Netflix has said it is heading for a record quarter in terms of revenue, up 23.6% year on year to $7.1 billion. On a year-on-year basis, the company's own forecasts for net subscriber additions aren't looking quite as strong. Netflix is aiming to add 6 million subscribers in Q1, compared to the staggering COVID-aided 15.8 million it added in the same time the year previous. And after stating it was chasing an operating margin of 20% in the full year 2021, up 2 percentage points from 2020, an update on profitability will be crucial on Tuesday. Briefly spiking towards an all-time high of $590 in the afterglow of its Q4 update in January, Netflix stock price has taken some hits since, at one point dropping under $500 in mid-March. It's now moving between 540 and 560 and could be put back on the path to its record highs if it all goes to plan this week. It does seem like, normally subscriber additions is the key number for Netflix, and they're unfortunately a victim of their own success in that 6 million is nowhere near the 15.8 they saw for the same period last year. However, the reaction to the update and how the stock performs afterwards is likely going to be dictated by how much investors go into that forewarned, and with the knowledge that whilst these figures aren't going to be anywhere near as strong as Q1 2020 for obvious circumstantial reasons, adding 6 million subscribers in Q1 is still very strong when you've had such a blockbuster 2020 in terms of additions. Like, as mentioned, also, if it hits those numbers on revenue, any beat in revenue and any sign that it's going to be more profitable than initially stated will perhaps soften the blow of that still strong but not as comparatively strong subscriber additions on Tuesday.